Hello, I'm Big Cheds. I want to say thank you to everyone for watching. It is an absolute honor and a privilege to be able to host this show for Crypto Banter. There's a great community at Crypto Banter. I'm very happy to be part of it. Please hit that like. Please hit that subscribe button. The name of the show is Trading Wisdoms with Big Cheds. We're going to be talking about wisdom from my book. Hopefully I can teach you some tricks. We're going to do a little bit of Bitcoin commentary, overview on the market. And I'll have a guest. We have a great guest today. So thank you for watching. Let's get this thing started. So we'll jump right into my screen and we'll make the introductions. I do want to say thank you again to everybody. Most of you may know me from Twitter, where I'm known as a chart guy and a newbie helper. And that's something that most people are familiar with. I tend to look at things in terms of price action, in terms of key support and resistance levels. Fred, if we can just kick it right over, we'll get that thing going. So you can find me again. I am on Twitter at Big Cheds, as I mentioned before. If you're looking for the book, it's called Trading Wisdom. It's available on Amazon right now. It has a great reviews so far. Thank you to everyone. Many of you are in the Banter family, so thank you for that. Paperback and Kindle. I also have a free version on my YouTube channel, Cheds Trading. If you want to check that out on YouTube, under the playlist, 50 lessons every trader should know. That's a great way for me to expand on my ideas, expand on my thoughts, and bring those ideas to you. So let's just jump right back in to the book. I'm going to read from the book itself, Trading Wisdom. For those of you who are at home today, we're going to go right over to page 25. I'm going to pop up on my screen the introduction and the about the author section for the book, so you can kind of get a sense of what's going on and who I am. So as I said before, I'm kind of a chart guy. I'm a newbie helper. I've studied Japanese candlesticks and classical charting, and I've been pursuing the CMT course. I am level 1 currently. I'm also a proud founding analyst at Bitcoin Live. So if you're interested in kind of that next level premium educational content, that's what I spend a lot of time on, with twice a week updates. But I was just like you. When I started, I had no idea what I was doing. I made so many mistakes. I started to learn from those mistakes, and I began to pass them on to others through my Twitter account, eventually through my blog, chedstrading.blogspot.com. And then, I took it to the next level. I started to read textbooks, and, I kind of took it from there. And that really was the beginnings of this book. So today we're going to talk about lesson 8, don't marry your bags. And I think that's something that's really hard. Martinek's asking if there's an audiobook. There actually is no audiobook, but that's why I started the free version on YouTube, because you can listen to it. So there's no audiobook yet, but I'm trying to give you some content for that. So from chapter 8, or from lesson 8, we're at page 25. I'm going to start out with a quote. And let me know if you can relate to this. If you feel like you need to defend every negative comment you see about a play you are holding, that would suggest an unhealthy level of emotional connection. Be surgical with your investments rather than falling in love with them. So I know I've been there. I've been there too many times when I've had too much money in a play, and I'm waiting for it to move, and I'm watching the chart. I'm watching the 5-minute chart. I'm watching the 10-minute chart, the 1-minute chart, right? Because I'm obsessed. All my funds are in there. All my buddies in the chat room are telling me that it's going to the moon. And then I see a chart and someone says it's going down, or I see a comment and someone says it's a scam, and I'm triggered. I'm immediately triggered. I need to go. I need to respond to that comment. I need to let them know they're wrong. And guess what? That's not a good sign. You should never be in a position where the trade you're in makes you feel like you have to defend every negative comment. That's how a market is made. You have to have people who believe it's going to go one way and people who believe it's going to go another. That's what makes it a market diverging opinions. So if you feel like you have to defend every negative comment, that's not good. You've married your bag. You need to slow down, probably reduce your position size, right? And it's hard to do that. You need to be mindful with your trades. You need to be mindful of how you're feeling when you're entering your positions, when you're exiting them. As I say in the book, the quote, emotions are great when you are painting or writing or composing music. But when you are trading, they are kryptonite, right? Complete kryptonite. Think about how this manifests itself. Sometimes because of your emotions, it will prevent you from taking a really good trade. So let's say you've been watching something and you thought about pulling the trigger, but you didn't pull the trigger. And you said, I'm not going to do it. And then it bounced. And you say, oh man, I can't believe I didn't do that. I hate myself. I'm a terrible trader. And you kind of almost revenge trade into it. And you bought the top, you bought the top of the pump, and now it's coming back down. That you need to remove your emotions. Be surgical. Either execute your plan or don't. Stick to your plan. Be methodical. It's just numbers on a chart. It's just price action. And it's hard if you're one of those people who believes in the fundamental analysis, who believes in the tokenomics or whatever that stuff is called. I just look at price. I look at supply and demand as expressed on the chart. And I'll go over that a little bit with you for Bitcoin. And I identify where I think I can find value, where I can execute a trade. So you want to be mindful of your emotions. These, as I say in the book, in page 25, these emotional manifestations can cause problems in many ways, such as after a failed trade. Losing money is frustrating because you thought you had a good plan and then everything fell apart. Emotionally compromised, now you want to chase after that loss and redeem yourself, so you jump right back into that failed ticker. More often than not, this will end badly as you do not have a good feel for the price action, and one mistake tends to lead to another. So, like if you lose money on a trade, you don't have to make it back in that same trade, right? And by the way, hit that like button. Please hit subscribe. Thank you, Banter family. If you lose money in a trade, don't make it back there. Don't try to make it back there. Go play something else where you have a clean feeling. Go play something else where you're not compromised, where you're not going to feel like you're a fool, where you're not going to feel like, oh, I can't make any good trades, I'm a terrible trader, right? Never get in a position where you're beating yourself up and you're going to be compromised. So, one of the things I've talked about on Twitter, at Big Cheds, by the way, after a losing trade, a big losing trade, I actually delete that play from my watch list. I don't want to watch it anymore. I don't want to be thinking about it. I want to take a break from it. You need to find ways, because we're emotional creatures. We're emotional animals. It's natural. So, trading skill is one thing, but being able to manage your emotions, that's like harder than understanding the probability of an ascending triangle breaking out or whatever. It's, knowing yourself, managing your own emotions. That's so much of what we have to deal with as traders. A little bit more on this topic, and then we'll take a look at the price chart, a little bit of Bitcoin. We'll do some of your chart requests, and we'll bring on our guest. So here's what I say at the end of this chapter, and the quote is, avoid the impulse to let one bad trade ruin your day. Stay focused and reject the emotion of self-loathing, right? Reject the impulse to just hate on yourself. What's that going to do? I mean, so what? You made a bad trade? Like I do that every day. I do that before breakfast, okay? I have a losing trade before breakfast because I'm trying. I'm out there. I'm experimenting. But I'm managing my risk, right? That's probably one of the things you're not doing is you're not managing your risk. You're not deciding when that trade fails. So, keep those things in mind while you're trying to manage your emotions. And these topics are kind of tied into everything else, how to, profit taking. I actually have a chapter specifically on emotional mindfulness, lesson 10, for those of you who've read the book. Let's jump back over to the chart. I think that will be a little bit more interesting. By the way, thank you for watching. Please hit that like. Please hit that subscribe button. I think it might be helpful for me to just give you kind of an overview on where I think we are in the market right now. I'm on the daily time frame. Of course, on the weekly time frame, we never really led up the uptrend. We never really gave up that uptrend because the price was able to hold on to this 50-period simple moving average. A simple moving average means that every candle has an equal weighting as opposed to an exponential moving average. Here we have the green line, 8-period exponential moving average. So weekly chart really never broke down, but you can see on the weekly chart, and then I'll go back to the daily chart, this key horizontal level. So one thing you want to try to identify and keep in mind is when you have a level, and this is really what Bitcoin has done, where it comes up, it rejects, comes back, finds support, and it breaks through, does whatever it's going to do, some pattern, comes back, briefly pauses, and then breaks down, comes back, rejects there again, right? Come back, rejects there again, boom, breaks through. So what's the common denominator? This is an important level, and you can kind of use that level, whether you're above or below it, to as a long thesis on this kind of longer time frame on the weekly chart. And you can see on the weekly chart that we've had a breakout from that May through July, or through early August consolidation. We had an 80-day rectangle, and we'll go to the daily chart and I'll show that to you. We had the price essentially consolidating for 80 days, and it put in a low here just at 30K. Again, initially rejected. Take a look at that. Top of end of July, beginning of August. Again, it was telling you. Right? The price was telling you, and again, you always want to listen to the price. The price was telling you that's a key level. So we broke up above it, right? And then we started to cool off. I've talked about some of those warning signs on my YouTube channel, on Twitter. At the MA20, how we started to close below the MA20. We had some divergences on lower time frames. That's a little more complicated maybe than some of you are used to, but there were warning signs that we were due for a consolidation in this 49 to 51K range. And that's okay, because we had gone 6 weeks in a row of higher highs and higher lows. And when you do that, you need to cool off, you need to consolidate, you need to understand that a strong trend will go up, and then we'll come back and test prior support and keep on going back up. That's kind of the whole concept of stair stepping, of building support as you go along. So that was the level. And we had that weakness, and then we have that big flush candle. So if you look at that September 7th day, right, let's just clean it up. Let's just do that. Let's just start from scratch, and I'll show you what I'm talking about. Right there. So the highs of January, lows of February. I'm sure you've heard me talking about this before. It's the most important thing on this daily chart. Look where the price found support on September 7th. So, it paid. It paid if you had a low ball bid, a very low entry based on a key level, right? And for bulls to continue, you have to be able to do what's called a throwback, where you break through a resistance and you come back and you test it before continuing, right? And this is a key level. This is a key horizontal level. You have multiple touches with what's called time interval in between them, right? You have all these touches. This came close to it here. All these touches with time interval, that makes it an even stronger level to watch. So if we're below this level 42, 43K, I think the price is in danger. Okay, it's not only that key horizontal level, it's more or less the top of this 80-day rectangle. We don't want to see below 42K. Now, what's been going on lately? We've been consolidating after that drop down and after bouncing at what would be a logical support level. We talked about why it was logical, right? After bouncing off a logical support level, we have to continue. And how do you continue? You continue by initially establishing the height of a bounce, right? So here's the height of the bounce, where the price was initially rejected on that September 8th, September 9th candle. And what that does for you is when you can establish that level, you can use that as a level to start a new trade. So in here, it's chop, chop, chop. Your best entry is down at the bottom or on a breakout, because that breakout would have been a confirmation or a more likelihood that bulls would be continuing what they were doing before. And what they were doing before this drop is it was rising. So you want to think about the idea of buying dips in uptrends. And because of that, you're watching for a signal. We got that. But we're right there. I'm going to go to a little bit lower time frame, which it is appropriate to do when you're at a key level. And we can see on this lower time frame, the 1 hour chart, and then we'll look at the 4 hour, because there's a key level there as well. We can see that this 47.3 to 47.5, this is a big area where the price was rejected. We saw that on the daily chart, rejected here again. Okay, went back up, and then it found support, right? All right, now we're cooking. Bulls are doing something. Kind of bounced, came back, found support again. Now we're threatening to go below that. So we are threatening to have a loss of bullish momentum right now. So the point I'm trying to make is that the broader trend is bullish. We're in the middle of a consolidation after a 6 or 7 week advance. And what we want to keep an eye on is price above or below the most important level on this chart, the 42 to 43K horizontal level. In the meantime, we're doing an equilibrium, which is a rebalancing of the supply and demand dynamic after a big move. So after a big move, you get that big move, you set your high, you come down somewhere, you find support. Maybe there was like a bull flag here. So it finds support, comes up, that's your high or low. At some point, the price stops again, lower high, and then you look for high or low. It's a tightening range. And that's kind of an expected progression of price consolidation that you see on almost any time frame, on almost any kind of thing you're looking at, because you have to rebalance the supply and demand. You have to shake out the short-term speculators. And when you do that, let's clean it up. When you do that, it gives you levels to watch. Because again, you're always looking for a clear signal on the chart, a clear signal upon which you can structure a trade. You could have structured a trade when the price recaptured this level, and you did okay short-term. Whether or not you took profit is totally up to you. Short-term warning signal here with the tweezer top, where these two candles have the same upper shadow right at the middle Bollinger Band. It's kind of a short-term warning signal. So that kind of looks like maybe that's our lower high. That's a lower high to watch. Here's the high. So again, now, if that breaks, you can go long in that signal. I'm not saying it's going to. I'm not saying it's going to test it. But as the price evolves, you can pick out levels upon which to structure your trade. I think that's really what I'm trying to point out to you. For now, we want to see the price remain above the blue line in the interim. While it's not even testing 42, 43K, higher levels to watch is you want to see it maintain above the blue line, the MA200, and the orange line, the MA50. That's really what I would have to say about it right now. Do we have any questions? We have about a few minutes before our guest comes on. I'd love to take some questions from the chat room, Fred, while we have just a few minutes. And again, I definitely want to say thank you. I appreciate all of you watching this show, Trading Wisdom. It's a wonderful opportunity for me to reach out and connect with you. Thank you to the Banter family. You guys are awesome. I love the feedback. So many of you have reached out to me on Twitter. So it's been great. I've really been enjoying growing my network and talking to you folks. I'll just quickly take a look at the chat room and see what people have to say. All right. So while that's going on, why is the price going down, Time War? Well, very simply, and thank you for watching, very simply, you have the momentum where you've already set this high. So there's a little bit of weakness in the market, and the question is where bulls are gonna set that support level, and the price is going down because there's more sellers than buyers. It's a simple thing. I don't care about why. It's not important to me, because if it's important, it will show up in the price. So I just watch the price in relation to a key support and resistance level. Stop losses are simply put, and there's ways to do stop losses, a certain percentage move, a certain dollar move, which I don't recommend. Your stop loss should be the point at which your trade idea fails. Okay, it's really simple. Put it in your mind and think about it that way. So if your whole thesis is that, let's say this is $100 and it breaks up over 100 and you go long, your stop loss should be I'm back below 100, because that was the whole thesis. That was the whole idea behind the trade. Whatever you're in, like Sol recently had a key SOL, had a key 151 pivot level, and the long thesis would be above that, right? So whatever your idea is to enter the trade, it should be a defensible idea based on what's going on in the chart, based on momentum, based on something in the chart. And when that fails, that's your stop loss. All right. And you should also, and you should try to also place it on a nearby support level as well, a horizontal level, not on some weird diagonal line, a horizontal level. Why don't we go ahead and bring in our guest if he is ready, Fred? I'm really excited. Scott Melker.
I tried to put my name as Cheds Superfan on here, but it didn't come up. So I'll just be Scott Melker today. But let it be known I put my name Cheds Superfan.
I'm really thankful to have you here. You've been on every show, everything I've tried to do. You've been there for me. So thank you, man.
And vice versa. Congratulations on this, man. What a huge thing. The Banter family is absolutely incredible. You guys are so welcoming. So you are the best possible addition they could have had.
Well, I love you, man. Why don't you tell us, for those who don't know you, how did you get involved in crypto? Where can people find out about you, just briefly?
Sure. You can find me on Twitter at Scott Melker, YouTube /Scott Melker. Those are obviously the best spots to find me. Listen, I've been interested in financial markets since I was a kid. I started buying stocks when I was 12 or 13. I had very poor and mixed results generally trading until the mid 2000 teens. And I found crypto in 2016 after all that. I really came for the trading, but then, like many people, dug down, went down the rabbit hole, and really became much more passionate about the actual assets in the space. But still, listen, I'm an investor first, I think, but at my heart, I'm still a trader. I love, trading around my positions and trying to stack more sats. And that's pretty much what I've been doing ever since. And from there, sort of, cut the newsletter and the podcast and the YouTube channel, just because when I get obsessed with something, man, there's no stopping me. And I just cannot stop talking about crypto all the time.
You are prolific. I admire your work ethic. I have to build up my mojo to do a show, and I think you do like 6 a day or 6 an hour. I don't know what it is, but you're active.
It's just the way it's like the way I tame my ADHD. I'm up at about 4:30 every single morning, writing the newsletter, prepping for the 9:30 stream. I do 2 or 3 of these. My afternoon stream. I just love it, man. I love it.
So why don't you tell us? I know you dollar cost average a lot. I know you're a huge fan of that. We've talked about it. It's an easy way for someone who hopefully realizes you can't time the bottom, you can't time the top. Talk about dollar cost averaging, if you don't mind, and kind of what you think about where we are, with Bitcoin right now.
Sure. Well, yes, dollar cost averaging takes all the guesswork out of investing. It's not really a trading technique, it's an investing technique, but it's the way that people have accumulated wealth since basically the beginning of markets, right? And people forget the fact that most people who are wealthy have never looked at a chart, don't even know they exist, have probably never heard the term technical analysis, and still have made life-changing money by simply putting money into a market and not touching it for decades, right? As hard as that is, it has to be money that you're not going to take out. I've made this mistake. My biggest mistakes trading over time or investing were like, I'm going to buy this mutual fund for my retirement. And then 2 years later, I'm like, I want to go on a trip, and I sell it at a loss, right? Because I needed the money, or I need to pay my rent or something like that. But small amounts of money that you can dollar cost average, whether it's every Monday morning at 9 a.m., you buy $20 worth of Bitcoin. It adds up so fast over time if you allow it to grow. And markets go up and to the right. That's the way it works. And Bitcoin goes up and to the right faster than anything else. So if we're talking about where Bitcoin's at, I think that, we've exited the larger correction, in my opinion. I think we saw yet another leverage flush last week on Tuesday, which was coordinated well with the launch of Bitcoin as legal tender in El Salvador. Whether there's a conspiracy there or not, I don't know, or whether it was just a whale having fun with over leverage and a bit of excitement. And I think that now, as you said, we're kind of floating up, and I think we might dip down here, retest a little bit. But I'll tell you this, with conviction, I trade with leverage once or twice a year at most, probably. And I took along at 44,700 on this move. Right. So I did it. If my trade tells you anything, I think we're going up. And for me, it was sort of the situation where I don't do it often. If I'm going to do it, listen, I might stop out. That's fine. But I want that exponential upside. So if I caught the bottom of this move, I can ride this trade for a very long time and make my year.
So what was it? Was there anything on the chart that made you, if you don't mind,
Sure, I have my chart if you guys need me to.
Yeah, we got a few minutes. Yeah, it's great.
This is the monthly chart. So just so you guys know in general where Bitcoin's at. This has been in a channel since 2013, and we just flipped the center, the EQ, that equilibrium dash line to support. Again, that's where you get these ludicrous 6-figure targets, right? If you flip the EQ, you should be heading up. If I can dig, let me see. I actually probably have my trade up here. Yeah, this was the trade. And by the way, guys, I've talked about this a lot. So the first factor is bullish divergence with RSI oversold on the 4-hour chart. It's my favorite signal that there is, period. It was building for a long time, and that's why I decided to enter the trade. Whenever we see RSI go oversold, I'm looking for bullish divergence. But here's the actual trade, right? So we saw the drop last Tuesday. If you zoom out, that was to the dollar. Ethereum did the same thing, by the way, retest of the range that we were in from the drop in May. Right? We exited that range, came back, and you can see this is a retest. I mean, within $10, right? So in my opinion, we were sitting, I thought that was the bottom. So I was waiting for an entry. We were sitting on support here, this strong sort of demand area, had this descending channel. I went long right here, literally live 20 minutes before the Walmart fake news. Right?
That was fun.
Yeah. So this was my stop loss.
Yeah.
right? This was the trade I set
Ooh,
up. This was my stop. I missed it by about 40 bucks. I was actually thinking about putting it back down in here. So I got I will call it lucky or good. I don't know, but I missed my stop loss slightly. And then obviously we've exited from there. But so now I do think we'll see a bit of retracement. We have some bearish divergence, right? Where it tapped almost overbought. But now I think we'll confirm a hidden bullish divergence and hopefully head back up. But I mean, that's the general premise. Obviously, listen, I'm not like an MA guy, but you know, we did have the golden cross. Listen, if you shorted this death cross, you got wrecked, right? And
yep,
they're
yep,
not the best signals. They're lagging signals. But
yeah.
I like a cross when it's interacting directly with price.
That's it. That's a great differentiator there, Scott.
And
I'm
so
glad
like
you
when
pointed out.
when it's up here and it's way above price, it's kind of irrelevant because you're looking for the MAs to interact with price and act as actual support and resistance if you're going to use them. And in this case, we had price right on it, which was another reason that sort of compelled me to jump in that trade.
I think it's a great trade. I like how you walked us through it. I think you were identifying a nice buy the dip level in an uptrend. I think you also pointed out how you can never really nail the bottom. You had a nice technical entry and then some weird news hit.
Yeah.
What do you do? How do you manage that? Yeah.
Honestly, I was busy, right? The thing is that I don't manage trades generally. Now I thought about, I took it with less size than my full size and my intention was to add, and I have added slightly on the way up, but I was like on a stream and I didn't even know it was happening. And I started seeing all these messages about Walmart. I checked in and I saw price dropping. I said, listen, I'll stop out. I'm going to move on with my life or whatever. I don't move my stops once they're there unless it was in the plan. I figured if I stopped, then it would maybe come down, hit the top of that range, and I'd get another entry. So I thought that was news based. I thought it was one of those crazy sweeps. I'm going to assume that almost everybody who went long around the same price or shorted around the same price as me both got swept on the top and bottom, and that was basically a rinse. So listen, I was within 20, 40 bucks, a little too tight. I could have, honestly, with my risk, I only had less than 0.5% portfolio risk on the trade. I could have definitely had a much wider stop. So that was pretty risky.
I love it. I love that analysis. Just to leave our fans and our viewers, any wisdom do you want to leave them with? Advice for newer traders?
Advice for newer traders is don't trade too much. Every single law, I say this all the time. I wrote about it this morning. Every single trade you take should be viewed in your mind as an opportunity to lose money, not to gain it. And I think when you plan your losses like that, it's the only thing you can control in trading. You have no idea where price is going to go. The only thing you control is how big your position size is and where your stop loss is. So if you plan your losses and view every trade as an opportunity to lose, you'll take far less trades and far better trades, in my opinion, knowing where your risk is, how much you're going to lose. And then the upside, you can manage as it goes up, and you kind of have it in your mind initially that you're already going to lose. But at the end of the day, 70% minimum of your portfolio, in my opinion, should be long-term holds that you should not be touching, just adding to as you make more money. 15% in cash, and then 15% you can trade around with, spend on low caps, maybe go ape into some ludicrous monkeys or penguin farts or whatever people are buying out there. I have no idea. Do that with your 15%, knowing that you've just thrown 15% into the toilet, planning to lose it.
I love it. I want to say thank you for coming. I'm glad we ended it, the interview on that note. Managing your risk, that's what you can control, right? So
absolutely. Just downside.
Brilliant. We'll have you back, and thank you again. Thank you for coming.
Hey, thank you, man. Guys, I never say this, but for him, smash the like button. Smash it.
Smash the like, hit subscribe.
With your elbow and with your fist. Do it. Thank you.
We'll see you, brother. Thank you so much. So Fred will wrap things up here on my screen. I just want to remind everyone that this is Trading Wisdoms based on my book, Trading Wisdom. You can find it on Amazon. 50 lessons every trader should know. The reviews are great, and thank you for that. Banter family, thank you for that. I'm on Twitter if you're interested for more of what I do. I think of what I do as academic observations. I try to give you pivot points in the chart, things I see, and I talk a lot about trader mindset. I also am on YouTube at Cheds Trading. If you like the book, check out the free version where I'm doing one lesson at a time, a visual version. I just did lesson 6 this week. I also have an educational live stream series as well. Check that out. And if, of course, hit like, hit subscribe. Thank you to Banter. Hit, subscribe to them. If you enjoy my technical analysis, you're looking for more long form analysis, check out Bitcoin Live. I'm a founding analyst. It's the best-in-class educational platform for crypto. We have an amazing team. It's something I'm really proud of. But again, thank you. I love having you folks watching. I thank you for your time today, and I hope that you're doing well in your trading journey. And till next time, Big Cheds out.